It is 100% certain that fiat will continue to debase because of the debt spiral that we are in globally, not just individual countries. This is a global fiat phenomenon. I can worry a little bit about the Blackrock ETF and I could be like, all scared. Don't overthink things. There are potential problems with the Blackrock ETF, but if you hodl your own keys and you own the hardest asset ever introduced to mankind called Bitcoin.
Hey guys, welcome back to Everyday Finance. In this video, Greg Foss discusses about Bitcoin. According to Greg Foss, I could be all scared and say, don't overthink things. There could be problems with the Blackrock ETF. But if you hobble your own keys and possess the hardest asset ever, then I could be concerned about the Blackrock ETF a little bit, created for human use, known as Bitcoin. The math works in your favor because Bitcoin is increasing in value when measured in depreciating fiat currency. I'm at a loss for words. But the unit of account is decreasing. So you knuckleheads, you're not generating income from your home all right, so the value isn't generating any revenue. The importance of having a roof over your head has never diminished in your home. The unit of account used to determine the value of that has changed by 1 iota. Account, huh? That house, alright. Grasp maths? Not a chance in hell that Blackrock would target the most vulnerable asset. Blackrock uses its strongest asset to undermine any value it generates for itself. Consider the likelihoods. It's not a zero probability indeed, and lots of things Greg Foss discussed, so please watch the video to end. And like, share, subscribe our channel Everyday Finance, thanks.
To answer very sincerely and in a short, I'm very bullish, and I don't believe the FUD actually reflective of the true risk. That being said, I'm never 100% certain about anything, except I'm going to get to my punchline in the first 2 minutes of our podcast. The only thing I'm 100% certain of is fiat debasement. Everything that I do in life is about mathematics and probabilities, expected value. You said billions of dollars of bonds. That's a flattering intro, but here's the truth. A good day, I would trade $1 billion. Okay, like on one day, I would do that. Not that I traded billions of dollars of treasuries. That's easy to trade $1 billion treasuries. But trading $1 billion of some esoteric credit instruments, that's more difficult. And you got to be right in the meat and potatoes of the financial markets to do that. I didn't do it on a regular basis, but I could certainly think about 4 or 5 days in my career that I traded over $1 billion of esoteric credit instruments. You need to understand, people, there is no certainty in financial markets, except, again, mathematics prove that fiat debasement is 100% certain. And you can't argue with math, okay? Math is the base layer of language. It is 100% certain that fiat will continue to debase because of the debt spiral that we are in globally, not just individual countries. This is a global fiat phenomenon. I can worry a little bit about the Blackrock ETF and I could be like, all scared. Don't overthink things. There are potential problems with the Blackrock ETF, but if you hodl your own keys and you own the hardest asset ever introduced to mankind called Bitcoin, the math is on your side. Because if you measure Bitcoin in a debasing fiat currency, it's going higher because the unit of account is going lower. I don't know how to say it any more simply, you knuckleheads. You're not making money on your house, okay? Absolutely not making money on the value of your house. The value of a roof over your head has never changed, 1 iota. What has changed is the unit of account that measures the value of that account, that house. Okay? Understand math. Mathematics. Not FUD, not, oh my God, BlackRock's going to attack the hardest asset. Why would BlackRock attack the hardest asset? To destroy any value that accretes for itself? think about the probabilities. Yes, it's not a zero probability, but it is not an attack vector that is planned. I need people to play probability analysis. Understand that it's a distribution of outcomes where you have tail risks on both ends. But my God, you're supposed to play the most likely outcomes, not these tail risks. You can hedge against the tail risks, but don't go to the newspaper and say, I'm 100% certain about this tail risk that has, I don't know, less than 2% cumulative probability. You guys don't effing get it, okay? You just don't know how to manage risk. So that's my little pitch. Learn math, understand statistics. If you don't get grade 11 math, you probably missed the most important subject in school. So if you failed grade 11 math, have fun being a slave to the fiat Ponzi.
To put it briefly, I'm quite bullish, and I don't think the FUD is truly representative of the genuine danger. Having said that, I'm never completely certain about anything, save the fact that I'll hit my punchline in the first 2 minutes of our show. The one thing I know for sure is that everything I do my life revolves around fiat debasement, anticipated value in probability and mathematics. As you mentioned, billions of dollars bonds, that's a nice introduction, but here's the real deal, an excellent one day. I would trade $1 billion, not that I traded trillions of dollars worth of treasury bonds. Trading $1 billion in treasury securities is simple, while trading $1 billion in exotic credit is more difficult.
You see this? This is a $20 Canadian bill, okay? It's got a picture of the Queen on it. I think in Oz, you probably have a picture of the Queen somehow too, because you know we're both Commonwealth countries. So yeah. This is a $20 bill that is printed on paper and is actually debt. I need people to understand this has no value. It actually has negative value because it's attached to a debt burden of the country. So this thing isn't even worth intrinsically the paper value it's written on, it's printed on. There was a famous French philosopher, his name was Voltaire. He says that all fiat currencies eventually return to the intrinsic value of the paper it's written on. I will take issue with him. Very smart guy. This was around the 1600s or something. But he was wrong. It actually goes below the intrinsic value because it's not even worth the paper. What does fiat mean? It means trust. Trust me that this thing is accepted as a means of exchange. So in that way, fiat currency is valuable. It allows for people to, people can argue whether barter actually truly existed or if currency was really just a ledger system of who owes who what. Yeah. I won't want to go into that. There's a very great video by Wences Cesars. If you want to see true brilliance on stage at a Chicago gold conference, it must have been almost 10 years ago. He talks about how currency is really only a ledger. And if you use seashells as your currency, all that meant is somebody else owes you something. You brought home a buffalo and you had way too much meat for your own family, so you divided the buffalo up and divided it amongst your tribe. And the other person didn't have anything except they gave you some seashells, which meant you owed them something. It wasn't barter at the time. They didn't trade chickens for buffalo at time zero. They had this ledger account. Okay, what is fiat? There was a time up until 1971 where fiat was actually backed by something with intrinsic value called gold. And then in 1971, President Nixon of the United States took the United States off the gold standard. So now this fiat is backed by trust. Trust me, bro. Trust me that this is worth 20 units of something. In Canada, we call them dollars. I think in the US, I know in the USA they call them dollars. I think it's Aussie dollars as well. I'm not positive. But in Great Britain, they call them pounds. In lots of countries, they call them pesos or, fractions of pounds sterling or francs or whatever. Guys, don't overestimate. It's a ledger. It's a ledger that is losing value because you can print as many of these stupid things as you want. In theory, seashells are at least limited. Seashells of a certain kind are limited.
Yeah.
Bitcoin is 100% limited, protected by mathematics and code. But why did gold attain a value as a ledger? Because gold is scarce. Not programmably scarce, but the reality is there's hundreds of tons and thousands of tons of gold in seawater. There will be a price of gold, which it makes sense to mine the gold out of seawater. But at current prices, the growth rate of gold is about 2% annually, which is almost a definition of it being somewhat scarce. Bitcoin's even better than gold. And don't confuse a fiat currency, which is a ledger, with a store of value, which is a savings mechanism. They can both exist. They can both coexist. But please don't confuse the use cases for either one.